Hello everyone, this is Mark with Semantics Research with your daily report. So the market was a bit bid this morning, and we did chop around for a bit in the later part of the day at the highs during the Powell testimony, and it eventually towards the end of the day it did come down a bit. And it seems like oil is down because of recession fears that is outweighing inflation fears. Energy did go down the most today, and it seems like it was due to the British CPI, which spooked the Brent, and it carried over to the US stock. And the British CPI showed that, yes, inflation was increasing, but it was increasing at a lesser rate, which led to inflation fears dying down. Metals and mining did poorly today also, and it was down 3%, highlighting that people are afraid of risks to growth. The best performing sectors today were defensives and utilities, which were up on the day, which makes sense because people were buying defensives and long-term bonds. One thing to note is that the real estate sector did the best today. Perhaps it was due to the long-term rates coming down, which may lower mortgage rates in the future. We did see the 10-year push down so that the yield curve inverted, with the rates being at 3.16%, and it is possible that some people are betting that the Fed will back off before reaching the terminal rate. The TIPS yield stayed relatively flat, while the Treasury yields went down, signaling that perhaps inflation expectations may have to come up a bit more. And it seems like many people were buying longer-term bonds over stocks today, which is probably due to the flight to safety due to recession and inflation fears, although recession fears are outweighing inflation fears at the current moment. The short-term yields, such as the 3-month, has gone up today, so people are nervous about the short-term versus the long-term. So that is why they are exiting shorter-term bonds, because inflation being too high at the current moment. During the Powell testimony, some notable things that the chairman said was that in the face of rapidly changing economic conditions, they will have to, they are adapting to their policies to this and will continue to do so. And when Powell was asked about 100 basis points rate hike, he did say it was not off the table. We do see some more housing data, with mortgage applications only being 4.2% versus 6.6%. Purchases being 7.9% versus 8.1% last time, and refinancing being negative 3.1% versus 3.7% previously. And it seems like with rates being higher, no one is refinancing their house because they did it in the last 5 years. Mortgages are dropping. The mortgage applications are dropping due to unaffordability, due to higher rates, which causes buyers to lose buying power to these higher rates, as highlighted in the last report from yesterday. With the Russia sanctions, it is likely we will see further volatility to oil, as Russia is seeking leverage as well over Europe with winter approaching, and they may seek to cut off gas completely, and there must be a contingency plan for Europe, as it is not easy to replace a lost supply. So I cannot imagine the situation is going to go very well. And yeah, with that being said, I want to thank you all for watching. Be sure to check out the links in the description, and do subscribe if you find our content very valuable or entertaining. Thanks again.